The Federal Reserve raises rates by 50 basis points, taking them to their highest level in 15 years. Chairman Jerome Powell indicates the fight against inflation is not over, says the Fed will stay the course until the job is done, as it expects to hike rates up to 5.1% in 2023. Indices correct up to 0.25%, discouraged by a longer and higher than expected rate hike cycle. Stocks in the Asia-Pacific open largely lower after the Fed raises rates by 50 basis points and signals more hikes in the coming year. The SGX Nifty 2 indicates a weak start for the Indian market. After the US Fed, the European Central Bank, the Bank of England and the Swiss National Bank will also announce their policy decisions today. All three central banks are expected to hike rates even with signs that inflation has peaked. Oil surges as OPEC and the International Energy Agency forecast a rebound in fuel demand over the next year. A slower pace of hikes from the Fed also leads crude higher. The government says it will sell up to 5% stake in IRCTC through an open offer for sale. This includes a green show of 2.5% in other stocks to watch. Pune Ala Fincorp sells its housing finance arm to TPG for 3,900 crore rupees, while Glenmark Pharma will divest its cardiac brand in India and Nepal to JB Chemicals for over 300 crore rupees. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines, big cues that we got overnight. And of course, the biggest one is Fed hiking rates by 50 basis points. So let's talk about all of that. But first up, let's take a look at the Asian markets. Taking cues from Wall Street, they are largely lower in trade as we speak. So Hang Seng is down 320 points. That's a 1.5% cut. Even Taiwanese index is seeing cuts of 0.3%. We have Nikkei, which is down 72 points. Shanghai is down 8 points. Straits Times also down by 16 points. So across the board, there is selling on the fear that the rate hike cycle is longer than what the street was working with. SGX Nifty, as a result of which, is indicating that the start for our own markets, well, that will be in the red. It's a 70-point downtick. What the SGX Nifty is indicating right now, it is at the day's low. Now, let's begin this news with the biggest global market cue this morning. The Federal Reserve raised its benchmark interest rates by 50 basis points, taking them to the highest level in 15 years, indicating that the fight against inflation is far from over. Fed officials also forecast raising rates through next year and see no reduction until 2024. In a somewhat hawkish tone, the central bank says it sees itself taking the rates as high as 5.1% until inflation is brought under control. CNBC's Steve Leisman with all the highlights.
The Federal Reserve raising interest rates by 50 basis points to a new range of 4.25% to 4.5% as expected. The Fed saying ongoing rate hikes will be appropriate. The Fed also raising the 2023 median forecast of Fed officials went up to 5.1%. It had been at 4.6%. This is higher than market expectations for a peak funds rate. It is, by the way, right in line with the Fed survey at 5.15. 17 of the 19 officials are now above 5% in their forecast for the 2023 funds rate. None were above 5 in the September forecast. 7 officials, in fact, are at 5.40, and there's one person who's at 5.63 for all the way through 2025. The funds rate then see going down to 4.1% in 2024, 3.1 in 2025, with a long run rate eventually being reached of 2.5%. The Fed repeats it will take account of the cumulative effect of rate hikes and lags in setting policy. This is again from the statement. It will continue to reduce the balance sheet by $95 billion a month. It says growth has been modest, inflation elevated, unemployment low, and job gains robust. So it still sees that tight job market out there. It raised the GDP this year to 0.5 from 0.2. That's because of the strength we've seen in the fourth quarter, but it lowered it to just 0.5 point for next year from 1.2. Ratcheted up a bit the unemployment rate to 4.6 from 4.4 for next year. Stays there for 2 years, by the way. And it sees inflation gradually declining to 2% by 2025. So 50 basis points, but pretty hawkish when it comes to the outlook. And good unanimity, by the way. The statement, the policy decision was unanimous. Good unanimity also, at least by the board right now, on where rates are headed, and that is above 5%.
Okay, so that is the analysis of the overnight Fed decision. In fact, let's also listen into what Fed Chair Jerome Powell had to say.
As we've gone through the course of this year, as we lifted off and got into the course of the year, and we saw how strong inflation was and how persistent, it was very important to move quickly. In fact, the speed, the pace with which we were moving was the most important thing. I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most important question. But I would say the most important question now is no longer the speed. So, and that applies to February as well. So I think we'll make the February decision based on the incoming data and where we see financial conditions, where we see the economy. There's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time. Our focus right now is really on moving our policy stance to one that is restrictive enough to assure a return of inflation to our 2% goal over time. It's not on rate cuts. And we think that we'll have to maintain a restrictive stance of policy for some time. Historical experience cautions strongly against prematurely loosening policy. I guess I would say it this way. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. To the extent we need to keep rates higher and keep them there for longer, and inflation, moves up higher and higher, I think that narrows the runway. But lower inflation readings, if they persist in time, could certainly make it more possible. So I don't think anyone knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not. It's not knowable.
Okay, that is the word coming in from the Fed governor, reacting to the Fed decision and commentary from Fed Jerome Powell. U.S. markets on Wednesday closed lower, with the Dow Jones down over 140 points, the S&P 500 24 points lower, and the Nasdaq Composite closing with a 85-point cut. And to the final update from our global market wrap this morning, weak cues from Europe as well, with the French CAC down 14 points, the German DAX 37 points lower, and the British FTSE closing flat with a 7-point cut. Investors will be monitoring more policy decisions today coming in from the European Central Bank, the Bank of England, and the Swiss National Bank. The European Central Bank is all set to hike rates by 50 basis points on the hope that inflation has peaked in the region. Commentary on the quantitative tightening cycle and the inflation trajectory will be tracked. Meanwhile, the market is pricing in a 50 basis points hike from the Bank of England. Remember, the inflation rate in the UK slowed to 10.7% in November, falling from a 41-year high in October. With that, we'll submit to a break now. Up next, we'll get you all that you need to know ahead of today's trading session in terms of market cues and the stocks in focus. Welcome back. You're watching Power Breakfast on CNBC-TV18. Well, we've spoken about the overnight cues, big ones at that. So how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, coming up to you first up. What is the market setup looking like today?
Well, good morning. The kind of hawkish sentiment that we've seen as far as the Fed is concerned has led to a bit of risk-off sentiment across global markets. So U.S. markets ended in the red yesterday's trading session. European markets too ended in significantly off the day's high, and again they also ended in the red. Now, coming closer to some of the key points as far as the Indian markets are concerned, you have to have a look at crude oil prices. Crude oil prices have bounced quite significantly off the recent lows. Yesterday, Brent futures went up a little over 2.5%, and WTI futures too ended at almost $2 higher at the $77 per barrel mark. Now, this was on the back of the fact that the IEA, the International Energy Agency, has actually forecasted a better demand outlook as far as 2023 is concerned. Now, coming closer to the Indian markets, Indian markets yesterday ended with minor gains, and the Nifty Bank continued its strength, ended at a record high for the second session running, and the mid-cap index actually outperformed. Now, it's going to be interesting to see, given the large amount of news flow that we have today, and also on the back of the weak handover that we are seeing, both Asian markets are drifting lower, and SGX Nifty 2 is indicating a gap down opening. Whether this particular strength can be sustained, or we see risk off even across the Indian markets in today's trading session.
All right, okay. That is the update as far as market cues are concerned. Vivek, thank you for that. Surbhi is joining us now. She'll list out all the stocks that will be in focus today as well. Surbhi?
Hi, thanks for that. So I have a few stocks on my radar this morning. The first one is Sapphire Foods, where the promoter and a shareholder are looking to sell nearly 11.5% stake in the company. Promoter Sapphire Foods Mauritius and Sagista Realty Advisors are looking to sell 40 lakh shares and 1.5 lakh shares respectively. And WWD, a Ruby, a foreign investor, will sell 32 lakh shares representing nearly 5% stake in the company by December 21st. Next is Poonawalla FinCorp, where the company announces sale of its housing subsidiary to TPG for 3,900 crores. IRCTC, the government is looking to sell 2.5% stake at rupees 680 per share with an option to additionally offload another 2.5% stake. Power Grid, where the board has approved investment for transmission system in Rajasthan at an estimated cost of nearly 331 crores. Glenmark and JB Chemicals, where Glenmark Pharmaceuticals is going to divest its cardiac brand Razel in India and Nepal to JB Chemicals for a consideration of nearly 315 crores. And lastly, Torrent Pharmaceuticals, where it enters into a co-marketing partnership with Boehringer Ingelheim India to co-market its antibiotic drug and fixed dose combinations in India.
Surbhi, thank you so much for joining us with all those details. Those will be the stocks in focus today. Finally, let me go across to Manglam joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So, I'm looking at all the cues that are coming in from the F&O space, and that's telling you that yesterday, while the markets ended higher, they ended off highs. So, that is something that we'll have to watch out for. At the same time, the SGX Nifty ahead of the Fed, after the Fed meet outcome, is indicating that the start could be lower by almost 50 odd points. No problems with the cash market. The second day running, we saw both the FIs and the DIIs end up on the buying side. 1,100 crores with the net institutional flow in the cash market. But in index futures, remember during the midday, the Nifty futures premium was over 100 points. But that's now come down to around 87 points. And that's telling you that there was selling in index futures. The FI sold about 650 crores. That was mostly, some short additions and mild long unwinding. Most of the short additions have actually taken place on the Nifty Bank itself. It is weekly options expiry today, so we'll have to watch out for that. The FII longs have slipped mildly from 61% to around 59 odd percent. And ahead of the weekly options expiry, the FIs have actually unwound short put. So that's telling you that the downside risk opens up. At the same time, they've unwound long calls. So they're saying that maybe they have booked some profits on the way up itself. 18,700. Usually on weekly options expiry days, you look at one strike price with both the call as well as the put together. 18,700 seems to be that. 18,700 call and put have been equally active for a premium of almost 110 odd rupees. The straddle writers of 18,700 are eyeing a range of 18,590 to around 18,810, and that's where the SGX Nifty indicates that we are likely to open. So will this opening dip be bought into or not is something that we'll be watching out for. Were we to fall lower, 18,600 put has seen a fair amount of writing for a premium of 30 odd rupees as well. So 18,570 would be an important support to watch out for. Another important support at the lower level would be the 20-day moving average, 18,527. But yesterday's high of 18,696, very close to the 18,700 mark, will be an important resistance to watch out for too.
Okay, we'll watch out for those levels. Thank you, Manglam, for joining us and telling us all about the F&O cues. We spoke about equity markets, the market cues. It's time to talk commodities now. A lot happening in that space as well. Manisha Gupta is joining us, as always, with an update. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. Well, I'll start with the crude oil prices, which have surged 2% yet again overnight, putting in a third straight day of gains here. And the prices really have moved far away from a one-year low that we hit just on the 9th of December at $75 a barrel. Well, the U.S. crude inventories have jumped higher since March 2021, but that also hasn't really dampened the spirits here. It really is about the supply disruptions due to the Canada Keystone pipeline. And then apart from that, the OPEC and the IE offered bullish demand outlook 23, especially with Chinese markets reopening. So while there is strength in crude oil prices, not such strength in the precious metal prices, gold and silver have come down on some profit taking here. This is after the U.S. Fed delivered expected 50 basis point rate hike, but the Fed also signals on a terminal rate higher at 5.1% with no rate cuts expected before 2024, and that's soured the mood a bit.
Okay, all right, Manisha, thank you so much for joining us. So that's all